Welcome to the Sales for the Nigerian Wedding Industry podcast. I'm your host, Abuja-based photographer Tabishima Ayede. The previous episode, we looked at some alternative income sources for wedding professionals. This is a departure from the kind of stuff that I normally talk about, which is personal selling or sales-related things. But I'm talking about this topic today and the one that I did previous just because as wedding professionals get together in Abuja, as I'm sure they do routinely in your own part of the globe, we get together, we always talk shop, and so these are some of the topics that come up time and time again. So last week it was multi-level marketing, MLMs for short, that I went through, and today I'm going to continue the discussion on alternative income sources for wedding professionals. Like I said, this is going to be a take on not what I think are the most viable forms of alternative income per se, but the sort of things that have been coming across my way in recent days and recent weeks. Now, I also received a pitch last week from a friend of mine who had this hot tip on an investment opportunity, and after prodding a little bit, I found out that it was FOREX that he was talking about. In case you didn't catch it, I'm going to rewind. He was talking about an investment opportunity, in quote, and what he had in mind as an alternative source of income was FOREX. He figured this thing is hot, let's jump on it and let's make some money. Now, there's a problem with the pitch, in my own opinion. The problem with this idea was when you set up Forex as an investment opportunity, remember that is the key word there, investment opportunity, you're setting up wrong expectations in the person that you are talking to. Now, in my opinion, investment opportunities, genuine investment opportunities, require some upfront study on some fundamentals. So if you want the person to invest in a company or in an agricultural product or whatever it is that you want him to invest in, there's going to be some upfront study on the fundamentals. So let's say you want the person to invest in the stock market. Person has to do a little bit of studying up on companies. You know, what's a company? How do you determine what a healthy company is? What are the ratios you look at to see which company is worth investing in and what is not, those sorts of things. So those are the fundamentals. Well, and then the direction that the company seems to be moving in. An example is back when I was in university, in Obafemi Awolowo University for my undergraduate degree. Back then, Cadbury, the chairman, I can't remember his name, this Yoruba dude, he ran into some problems, I think corporate governance issues, and at the time I remember most of my classmates were trying to sell off their shares. And I didn't think it was a good idea, and I spoke to a couple of people as such, and my reason why I didn't think it was a good idea was because of the fundamentals. And this was my reasoning. Okay, so this fellow has gotten into some trouble because of corporate governance issues. However, what does Cadbury do? Cadbury does Bonvita, what else? I can't remember, but I'll say the big product that Cadbury used to do at the time was Bonvita. And back then, about, should I say maybe 20 years ago, 15, 20 years ago, in Nigeria, there was Bonvita, and then there was Milo. There was nothing else. So now you have other things in the market. We have, now there are other teas in the market, including some European ones like, there's this one that makes people, that you take at night time before you go to bed. I can't remember, but bottom line is now we have a whole bunch more. But back then there was either Bonvita or Milo. And in my own opinion, this is what I thought. There's Bonvita, the market leader. The fact that this fellow has been involved in corporate governance issues or shady practices or whatever you want to call it doesn't mean that secondary school students are going to stop taking Milo, or that families are going to stop, not Milo, Bonvita, or that families are going to stop buying Bonvita. So in my own opinion, without knowing anything about balance sheets, I figured that the fundamentals are strong. The fundamentals being that there was a ready market that was going to keep on buying the company's core product, regardless of whatever shenanigans were going on in the boardroom. So that is what I mean when we talk about fundamentals. How healthy is the company? Is there a market that's available? a ready market that's going to keep on buying the product, those sorts of things. So if it's an investment opportunity, you're going to have to do some studying on the fundamentals. Now, second, you're going to need a cash injection. Now, when you throw some cash into it, when you have some spare cash, that should lead to, excuse me, steady, passive financial returns over time if all goes well. I'll repeat, steady, passive financial returns over time if all goes well. So in other words, when you're dealing with an investment, the idea is you throw in a couple of bucks and you get some change that comes out, and it keeps coming out steadily and in quite a repeatable fashion over time. So the whole idea of investing is you're not throwing in some change and hoping to make a killing immediately. Okay, so in my own opinion, that are the right expectations when you have an investment opportunity. Expect to do some studying up front to understand what it is that you're going to, and after you throw some money in, expect the income that comes out to be steady, and expect it to be long-term money. Don't expect it to be a huge sum that just hits your account and makes you feel all warm and gooey inside. So that's the idea pretty much when it comes to genuine investment opportunities. I understand for those of you who have done more intense studying on this that this is an unnecessary oversimplification, but I'm just trying to keep it simple so that we can vibe on the topic. Now, on the other hand, Forex is not an investment opportunity, in quote, but it is a trading opportunity. In fact, in those sorts of circles, people who invest in securities, I think it's regarded as active trading. It also requires some upfront study. It also requires some cash injections. However, there's nothing passive about Forex. You have to monitor the market positions depending on whatever time frame that you pick. Some people are comfortable with a daily time frame, some people are comfortable with a weekly time frame, some people are comfortable with monthly. While I messed around with Forex before I became a wedding photographer, I couldn't handle daily time frames. So I was looking at weekly and monthly. So you have a look at the market, you have your hypothesis, you think you find where the trend is going to go, and then you set your trade and you let it run. But bottom line is you have to keep dipping back into the market, which is not the same as genuine investment opportunities where you do your studies, you drop the money, and if all goes well, then you get your steady returns. Now, there's also a lot of use of margins when it comes to Forex. Basically, margin just means borrowing, more or less. So there's someone called the market maker that you're giving your money to, who's going to be placing the orders. And because typically you're getting into the market and you don't have huge sums of money, it's not like you have millions at your disposal. Maybe you have 50k, 150k. I'm not sure what's a decent amount to start with in Nigeria now, because when I fooled around with these sorts of things, it was a very, very, very long time ago. So bottom line is, if you have, let's say, 150k or 200k, that's not going to be enough to move the kind of volume you want and make the kind of profit that you want. So there are things called margins, and that's when you borrow money from the other person, and you have margins of, let's say, 1 to 2 or 1 to 4. So basically that means you tell the person, hey, Mr. Market Maker, for every 1 naira I have, can you loan me 4? So that if you put 100 naira in the market, it will have the effect of 400. But anyway, that might be too much for this for the scope of what it is that I want to talk about here today. But basically, what I want to say is that it's a little bit more complicated when it comes to Forex. You're not just going to study the asset class in question. Since this is Forex, you're going to be trading currencies. So you're not just going to study dollars and pounds. I don't know of anyone who trades in Naira against the USD, for instance. So you're not only going to have to study your asset class, you're going to learn how to study market positions. You're going to have to learn charting, those sorts of things. But I guess the most important thing that I want to stress here is that when it comes to Forex, there are no passive returns. You have to actively manage your positions, either daily, monthly, or weekly, or whatever time frame that you prefer. The reason why I'm stressing passive returns is because if you want steady and passive income, then Forex is not for you. Okay? If you want to make a killing and you're okay with speculation, then Forex is your thing. But bottom line, what I'm saying is, if your friend walks up to you and says, "Hey, my guy, I have this solid investment opportunity, and it's Forex," and when you hear investment opportunity, what you think is steady, passive income over time, then Forex is not for you. So is Forex a good income diversification source? Just like with the last discussion we had, the last episode, yes and no, because it requires you to study currency pairs. Not everybody is cool with studying the dollar versus the yen, and it also requires studying fundamental analysis. You're going to have to look at country, what's that word? Macroeconomic forces. Yeah. So you're going to have to look at the economic strength of the country. So in places like America, you're looking at what's that thing called? Is it job losses and job gains and things like that? You're going to have to look at balance of trade. You're also going to have to look at the countries. Let's say they have the equivalent of the central bank. So you look at the central bank's monetary policy, all those sorts of things. So you have to do some fundamental analysis there. You're also going to have to study some technical analysis, and by that, roughly we mean studying graphs, studying charts, studying patterns, just to see where the market is headed. And then the main reason why I think most people should stay away from Forex is that it requires strong emotional resilience, because what you're trading on is market sentiments. You're trading on people's confidence, people's fears, and people's hopes, not necessarily on the currency pair. And so you need to be able to keep a cool head, and the average person cannot keep a cool head. Remember what I said back when I was in uni. So Cadbury, they seem to be having some issues in the boardroom, corporate governance. A lot of people get scared and start dumping the shares, which doesn't make sense, because you actually should be buying when the price is low. And after a while, it turned out that that was actually the case, that people should have held on to their shares until the price went low enough to swoop up a couple more shares, so that when the price rises, then you can sell and make your killing. So emotional resilience, extremely important when it comes to Forex. So bottom line, if you hear investment opportunity and you think, let me get some steady change over the long haul, then stay away from Forex. Maybe in the future, we can look at easier avenues for income diversification for wedding professionals. I think that it would be a good idea, when you're looking at income diversification, to stick to things that are kind of close to what you already know. If you have a shorter learning curve, then you're going to be able to move into new opportunities with a bit more confidence. Okay, so that's all for today. Thank you very much, guys, for listening. I hope you find this useful. For those of you who have any questions, comments, queries, and as usual, if you think I've said anything heretical so far, hit me up. Shoot me an email. That's ayede.tave@gmail.com, ayede.taver@gmail.com, or you can WhatsApp or Telegram at 08064662140. Thank you very much for listening. I'll catch you guys at the next episode.